Hello, I'm Donald Leggett, and welcome to the latest edition of the London South East CEO interview. I'm joined today by Colin Harrington, the CEO at AIM-listed Zephyr Energy, the junior oil and gas E&P company. Zephyr were formerly known as Rose Petroleum, and the focus is now on the Rocky Mountain region of the United States.
Yep.
Welcome, Colin. It's very good to have you on London South East.
Thank you, Donald. Very nice to be here. I appreciate the time.
Now, I understand you're coming to us from just outside Washington, D.C. today.
Correct. Yep.
So we're not going to be talking politics, but we're talking oil today, if I understand correctly.
Yes, sir. Thank you.
Okay, for those investors less familiar with the story, tell us what the focus of Zephyr Energy is and how is it different from the old version of Rose Petroleum?
Well, the short answer is it's very different from Rose Petroleum, but it has the one same core asset within it. I came into Rose at the time, about 16 months ago, and made a significant investment into the company. And we've taken the last 16 months, and yes, the name has changed, but there have been significant changes, many changes beyond that. First and foremost being that we've got 4 or 5 new board members, really good independent board, 2 non-execs with a lot of turnaround experience on the AIM. And then we have Rick Grant as our chairman. Rick had an incredibly successful career across the upstream and distribution sector in the U.S. Laterally ran Suez's global LNG business, which is one of the largest LNG businesses in the world. We're thrilled to have him on board. And we've spent this time transitioning all of the former old Rose assets away, except for the Paradox Basin, which we've restructured. And we have spent a lot of time trying to figure out how best to take that forward and develop it in the most beneficial way to our shareholders. So that's where we are now. We're on the cusp, and we're very excited to be moving things forward.
Okay, but good things have happened. Tell us more about the government-funded 16-2 research well in the Paradox Basin. The government are putting in $2 million, and you're getting the benefits. Hey, what's not to love? Tell us all about that.
Well, to me, it's fundamental. Drilling a first well in the Paradox is an expensive proposition for onshore U.S. It's about $6 million by the time you do the horizontal lateral through the basin. Too big for a company that is Zephyr's size. But what we've managed to do with our government partners is really break that in two, de-risk the project significantly, and also accelerate the timeline. So what we have is a $2 million research grant. It's administered by the University of Utah, which has an absolutely world-class geoscience department. The federal government is backing that grant. And what it does for them is it lets them increase the visibility of this basin. It's a natural fracture reservoir. So it's different than the basins that have gotten a lot of attention, from the Permian to the Bakken to the DJ. This is something that I think was overlooked, and yet, especially in this oil price environment, could be incredibly attractive from an economic perspective. It's also fundamentally a much better way to drill wells from an economic or an environmental perspective, which is very important to us as well. So we've been able to take this money from the government. We will drill down about 9,600 feet, maybe slightly more. We'll get 90 feet of continuous core from the Cane Creek reservoir, which has been the historically prolific reservoir in this area. And then we'll also be getting logs across a number of other zones as well. From my standpoint, we're just incredibly gratified to be working with the government and with the University of Utah to analyze this, to be able to have data that will dovetail really nicely with the excellent 3D seismic shoot that's been done across our acreage in the past. And we think it's the perfect way to kick things off for a very minimal investment from Zephyr's standpoint.
And what are the contingent recoverable resources estimated to be at Cane Creek? You mentioned Cane Creek Reservoir there as being the gift that keeps on giving, and also the 5 additional zones beyond.
Sure. So the Cane Creek was developed in this area either with very poor quality 3D or usually 2D seismic. But a company like Fidelity, which was active here before, was having better than 50-50 success rates, drilling really gangbuster wells, but without the benefit of the information that we have. So with our good 3D quality and with the logs and the cores that we will get from the vertical well that is funded by the grant, we look to come away not only with a really good understanding of how best to tap into the Cane Creek here, But there are also, and sorry, let me stop on the Cane Creek. That our estimates are about 9.9 million barrels of oil equivalent in the Cane Creek alone. If you translate that to an NPV basis, that's about $50 million at today's oil prices. So that alone, for a 2 million pound market cap company, we think is very significant. There are, as you mentioned, these 5 additional zones that show up really nicely on our seismic that are just above the Cane Creek. And we will be using this core, this vertical well to be able to go in and get the logs from those zones. And I think, what we hope to see is a significant upsize of our resource here. We know that the Cane Creek is there, that it's flowing, that it exists. It's the other 5 that could add, many, many, many multiples of the market cap to our existing value if we find what we expect to see based on our interpretation of the seismic.
And you're just going through a 2-part placing to raise £2.25 million, the second element of which requires shareholder approval at an EGM. So talk me through that a little bit more, if you may.
I'd love to. I think first and foremost, as you've seen, we've been relatively under the radar as we've developed this opportunity to the right point. We now viewed it to be in a great position with this collaboration that we did go out and we raised shareholder money both to fund our commitment to the well and also for future operations and or opportunistic acquisitions that might be there. We raised 2.25 million pounds. We were really gratified to see the reception. We were well oversubscribed. We've got a really nice mix of existing shareholders that came in. My group being, again, the core part, the largest single shareholder in the group. We also have a nice mix of new institutions and other existing holders that have been with us for a period of time and are looking to see us finally launch this asset. So gratified to see the reception, and we're looking forward to delivering on the proposition and make everybody a sizable return on their investments.
And how much of the 2.25 million raised will be spent on the next phase of State 16.2? So costs and timeline for the workflow, please.
So in the immediate term, we are drilling the vertical portion of the well. The U.S. government grant is providing the first $2 million to that. We have committed to fund an additional $1 million, up to $1 million. If the well comes in lower than that, then our commitment will be less. So the first $1 million will go towards the drilling of this near-term well. And that'll happen before the end of the year. Beyond that, if we would like to turn this well into a production well in the future, then there will be the drilling of a horizontal lateral that comes from it. It's estimated to cost about $3 million. And certainly we could use some of our proceeds towards that. We're also very active. As you can imagine, the market where we are right now is absolutely a buyer's market. Lots of concrete near-term development opportunities, lots of production opportunities. We've spent a lot of time building up our capabilities, our technical capabilities and operational capabilities in this side of the U.S., the Rocky Mountain region. And if we find something that meets our screen and we think is value additive to investors, we'll certainly pursue acquisitions as well.
So how ambitious are you, Colin? Where would you like to see yourself in 2 years' time?
Let me put it this way. We certainly have grand ambitions, but first and foremost, as a shareholder in this company, we're going to be very responsible with the way we allocate capital, and we're going to be responsible with how we develop things. We really want to use our best practices from an environmental standpoint. So we see ourselves, growing and really pushing the Paradox Basin forward quickly at this point. The vertical well will be by the end of this year. The data we gather from it will be happening in early January and February. We could be drilling the lateral. Should we have the right findings and the right partners, we'll be drilling that come mid of the first half of next year. So that will obviously be taking a lot of management time and focus. But again, opportunities like this market don't come along very often. And so we will be very actively pursuing other growth avenues.
And will that focus be on the Rocky Mountain region? People over here aren't probably quite so familiar with it as some of those other basins that you mentioned earlier. Tell us about the heritage and the potential for Utah and the Rocky Mountains.
Sure. So first and foremost, absolutely, our growth will be in the upstream side of the Rocky Mountain region. And I think one of the knocks on the old Rose was that it was scattered through a number of different geographies and even sectors. I am a big believer in honing and having concrete targets and being very specific with our activities. So the upstream side of the Rocky Mountain Basin, areas that are very prolific. The DJ Basin has produced for, probably 100 years at this point. We have pictures from the Paradox Basin of rigs floating down the Green River in the 1920s. These are areas with a lot of oil that conventionally were developed by vertical wells. And now you're seeing a real resurgence in those basins through long lateral horizontals. All of that being said, we've also seen some terrible practices, both environmentally and economically, of companies, really ignoring the costs of wells and the cost of production in an effort to go after volumes. And for me, I'm much less focused on volume metrics. I'm really focused on cash flow metrics and investment return metrics. So we will be judicious in where we grow. We will be developing and acquiring wells that throw off cash flow in this environment and make good returns for our shareholders.
So this is a good question for you then. Does the current West Texas Intermediate oil price of around $40, does that give you a problem? Are you profitable at that level of return?
Absolutely. We are comfortable developing at that level. And I'll tell you why. It's because what we've seen across these basins is a massive reduction in service costs. So the cost to drill, for example, a 2-mile horizontal well in the DJ Basin has come down almost 30% over the past few months. Break-evens at much lower than the current oil price, and very good returns at $40 to $50 oil, as long as you are selecting the right locations. Now, the Paradox, the initial asset that we have here, as I said before, it's a natural fracture play. You don't have to go in and artificially stimulate it. You're simply, you kind of wipe out those completion costs. So you're drilling more reserves for less money, and your operating costs should be lower as well. So we think it works very well in this environment. The same thing, we're selective about what we'll do in the DJ, and we will be, if we choose to participate in developments, they will be developments that make a lot of sense at $40 oil.
Okay, that's a very good answer. What can we expect in terms of news flow over the next 12 months or so then?
There's quite a bit that's happening here in the near term. We're obviously, we've just completed the fundraise for this vertical well, but operations and preparations for that drilling campaign have begun quite a time ago, starting with the University of Utah. Now that we've taken over as operator and as owner of this well, we're already in the midst of getting bids, soliciting service providers. You'll see a fair amount in terms of preparation work that's coming up for the well, as well as spudding before the end of the year. So that's in the near term. There's quite a bit that that shareholders should expect to see. And then obviously in the new year, there are pretty exciting things as well, just in the Paradox. Putting aside any M&A activity that we do, we'll get the research and the analysis back from our cores and our logs. We'll have the potential to drill the second part of this well, and we're highly focused on the end of the prize, not simply getting news flow. We really want to push forward and have cash flow at this point, good, strong cash flow by this time next year when I see you.
We've got a pretty good idea of where you're coming from, Colin. How about you just pull together those strands for us and give me what I might describe as the investment summary. Give me the top line as to why people should put their money into you as a share.
Okay, well, first and foremost, I think people should remember that my partners and I are the major shareholders in this company right now. We are putting our own capital in first, and we're doing the hard work to make sure it's positioned to bring other investors alongside of us. I think I'm really gratified to see some of our existing shareholders come along for the journey with us, as well as great new shareholders, and especially institutional shareholders now on board. So we are going to take this capital, and it is partially our capital. We are going to take it and develop reserves and projects economically and in an environmentally friendly way as you can do in this sector. We're a big believer in engagement with the E&P sector, but that there are best practices that can be much more beneficial, both from an economic perspective and an environmental perspective. And we are putting our money where our mouth is, and we are going to try to bridge this gap. This is the most important point. This is why I came in. There is very significant upside to this project, and the market cap at the moment is under 3 million pounds. So we think there are many multiples to be made if we can do this right, and we're willing to risk our time and our capital to do that.
Colin Harrington, CEO at Zephyr Energy, thank you very much indeed for joining us from just outside Washington, D.C. today. For more interviews like this one, which I hope you enjoyed, please subscribe to the London Southeast YouTube channel. And in these slightly difficult times, I'd just like to thank you for watching and stay safe, everyone. Thank you.